Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers from around the world. This is your host Vaibhav. For today's session of JForex Indicators Explained, we will be looking at one oscillator, the momentum indicator. The name is McClellan oscillator. This is a oscillator which gives you the idea of the momentum, whether it is bullish or bearish. You can utilize this indicator to look for the direction of the sentiments prevalent in the underlying instrument of your choice. You can use it for currencies, indices, commodities, or even stocks. So let us consider this indicator, which is listed amongst the momentum indicators. You can find it using the two options: the add indicator using F3 or quick search. Amongst the list, you will find it listed amongst the momentum indicator here. McClellan oscillator, here it is. All right. Or you can simply do a quick search, type in, and here it is. All right. This concept of this indicator is simple. It takes into account the difference between the advances and decline and takes the EMA of that difference for two varied calculation periods. First for the 19 and another one for 39, and then we deduct the 39 EMA difference from the 19 EMA difference to arrive at this output, using which we plot these histogram values, right? So that's how these indicators output is derived. It considers the closing price, and for the given candle period, if there is a advance, then that, and if there is a decline. So all these difference is calculated for a given candle period, and using that we arrive at this price action data. So for detailed formula, you will have to do a simple internet search and you will find it. We will not be going into its formula. For us, the session is dedicated to its interpretation and how we can utilize these to make informed trading choices on this JForex platform. As I told you, the concept is simple, and then we turn to its application. For figuring out the trading opportunities, you can utilize it in a similar manner. The way we use MACD, you can use its output value with 0 as a deciding factor. When we have the output above 0, that means the recent EMA difference, the EMA of the difference is on the rise, is above the larger period EMA difference, and that means the recent price moves are moving on the higher side, so it is better to go for the long trades. And if we have its output value in negative territory, that means the recent price moves are lower compared to the larger time frame trade, so it is better to look for short selling opportunities. So its interpretation is simple, and we utilize this to go for long trade or the short sale trade, depending on what side the momentum is. If we have this output value above 0, then we can start looking for the opportunities to go long. Whenever we have any dip and the reversal from those levels, we can try and go for new opportunities. And when we have this output in negative territory, and after due correction it starts to decline again, we can go for the initiation of new sale trade. So both these factors are reflected in its output value. When we have strong trend, then these output values will be going deeper into the negative territory when the trend is bearish, and when the trend is strongly bullish, we will have these output values on the rise. And when it enters into a consolidation phase, then we see there is a decline in the output value starts, but it doesn't really changes direction. It still remains in the positive territory only, and only when there is significant reversal, price changes direction, and then we have this decline in the output and it enters into the negative zone. So both this way we get a good sense of the prevalent sentiments in the market, and accordingly all we have to do is play on the side of the trend, as trend is your friend. So it is better to consider the trend and then make your trading decisions. So here we get edit indicator option. We have these four input parameters depending on which we will be getting one output value. The output value named McClellan oscillator. Depending on what kind of applied price you use, you will have slight variation in its plotting in its output. So if we consider different applied prices, suppose we go for the open price, then this plotting of the oscillator has changed somewhat. High price, again there will be some change. So depending on what kind of oscillators input parameters are, we will have the output measured differently. The typical price, weighted close price. Alright, now I will revert back to the close price. When we use short MA periods, we have to define this as per our requirement. You can lower it further if you want your oscillator values to be more responsive to the recent price changes, and if you want larger trend to be reflected, then you can increase it. Same thing applies for the long MA period, but the underlying concept to work fine, all you need to do is to make sure that this short MA period is lower than the long MA period, and that's how you will get an idea of what the trend is in recent price moves. So for that we consider this difference. Generally the ratio is kept at 1:2, but you can make changes to that also. Let's try out a combination of 10 for short MA periods and 20 for long MA periods, and you will have this indicator becoming a lot more responsive to the recent price fluctuations. All right, this is how the output value is working here. When we have the momentum sideways, then we will have these frequent changes from one side to the other, and sometimes what happens that for extended period of time the underlying instrument doesn't really go anywhere, and during those times we get these frequent changes. The output keeps fluctuating from the positive to the negative territory. So in this indicator also same thing happens. The underlying instrument doesn't really go anywhere, or for the range being narrow, it becomes very difficult to trade. But you, if you use other parameters to make some adjustment and try to filter out the noise, I think this drawback can also be avoided to some extent. Now let's try out a different combination. Let's see how it will work when we use 1 day's data for calculation of this short MA period and 2 days data for the calculation of the long MA period. So here, as you can notice, the fluctuations have become a lot less frequent. We are seeing these variations, the changes from one side to the other, happening less frequently, as we are relying on a lot more price data to make the inference for this McClellan oscillator indicator. And as a result of that, we will have these variations happening only after there has been a significant price move. So only after that we will have these changes. All right. Now again we go back to the editing panel. Here, coming to the now first I will revert back these values to the default setup as per its developer. Coming to the type of moving average, here also this type of moving average plays a significant role. What kind of moving average you are utilizing goes a long way in defining the type of output value for this oscillator. So let's try it one by one. If we use the SMA, then there is going to be more lag compared to what the output is going to be when we use EMA, as SMA tends to move slower compared to the EMA. In EMA, we give more weightage to the recent price move, as its name suggests, and in SMA, we simply take the simple moving average for all of the candles included in the calculation period. So it is not going to give more weight to the recent price data, and as a result of that, the SMS plotting is going to be more uniform regardless of how sharp the recent price move has been. Now, if we go for the triple exponential moving average, here you can notice that we have a lot more smoother plotting for these oscillator, and that is pretty much expected. All right, as TMA is a lot more smoother version of moving average. So depending on what kind of moving average you are using, you will always have different output values for these indicator, and as a result of that, the trade signals generated are going to vary substantially for all these different types of moving averages. So you will have to make observation and then determine what kind of moving average is likely to work best for you, and using that, then you can go for your customization further. For this output value, you can go for different color combinations, and this style can also be varied. Suppose if you want brighter color, then you can do that. If you want this output to appear as the bar chart, you have to keep the same. But if you want it in a line format, you can do that as well. So all these options are there. I think the bar chart pattern looks quite good. And also, if you want the output to look less prominent and more prominence to be given to the price action data, then you can simply go for higher transparency, and you will have these output of the McClellan oscillator appearing in the background, and more prominence will be given to the price action, this candlestick formation. Level, we have defined this level at 0 as per the default setup, but if you want your marker, the marker at which you will be inferring that trend has changed from one side to the other, you can vary this level also, but I think 0 is quite a good level to work with, so I'm not going to tinker with. But if you feel like, you can always make changes, you can increase it or decrease it, so all these options are there. You can also change the color combination and the styling option. Alright, so here now I have changed the color of these marker zero line to orange, and it is now looking a lot more colorful. Alright, coming to the advanced editing option, if you want the output of the McClellan oscillator to remain constant throughout the current calculation period, then current candle period, then you have to opt in for this, and only when new candle is plotted, we will have changes in the output and new plotting will take place. But for the given current candle, it will remain constant throughout the candle period. If you want the calculation period to be highlighted, you can opt in for this, and whatever is your calculation period, it will be highlighted as you can notice on the chart. If you want the calculation to be customized further, you can go for the instrument of your choice. You can use it simply from the chart. So whenever you will change the instrument, the McClellan oscillator's output value will be a new, and it will be calculated new as per the price data of the new instrument. The calculation period can be same as the chart, or you can even vary it if you want the calculation to be customized as per the default candle period. And if you want it to be different, suppose if you want it to be of 15 minutes rather than the rather than being same as the chart's candle period, then you can do that. So here I have now plotted these output using the 15-minute as the candle period for the purpose of calculation, even though the chart's output is of 1 hour for each of these candle. Now I will revert it back to the use from chart. Spread side can be ask or bid. There will be slight difference in its output value depending on what kind of spread side you are using, but not much. It will be broadly similar, but slight difference. If you want the indicator to appear on all the candle periods, then you have to opt in for this. But if you opt out, then you have to specify on which candle period the oscillator's value should appear, and only on those candle periods the output values will appear. Suppose now if we take hourly and 15 minutes, we will have these oscillators values, the McClellan oscillators values appearing only for 15 minutes and the hourly candle period chart. But if we change it further to say half an hourly, then there is not going to be any plotting of the McClellan oscillator, because we have specified that the indicator should be plotted only for the hourly and 15-minute time frame. Because of that, we are going to observe these changes. So now that I reverted it back to hourly, we have these plotting. All right, now again 15 minutes. So here we have it for 15 minutes, but not for other candle periods. All right. If you want the base period to be any of these options, you can go for these 5 options. Any of the one can be chosen for defining the base period. Generally, it doesn't make much of a difference. So it is almost like one and the same. So guys, that's it from my side for today's session of the JForex indicators explained. If you have any query or any idea to share, you can write back to me in the feedback section, and I will be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For trying out the various features, I have also included the link for the newly released JForex 4 platform. So try it out and see how this platform and this indicator works out for you, and let us know in the feedback. Thank you all for joining in. Tomorrow I will be back with a new indicator, new explanations, new uses. We will see new features for new indicator, so do come back. See you tomorrow. Goodbye.